Hey, it's Darin Germyn from McDonald Realty, and this video is all about helping everybody out there right now who has either maybe been laid off from work, has reduced work hours, or has been let go of their work due to the current catastrophe, we could call it, of COVID-19. This video is all about how to free up some additional cash and free up some additional cash easily from the way that your mortgage is structured. Now, I'm going to say that you always want to reach out to your mortgage broker and confirm any numbers that I'm giving you here today, but I'm going to try and very generally show you how a few minor changes in your mortgage can not only help increase your cash flow every month, but also help you keep your home. I don't want anybody in this current climate, this current crisis, to be worried about losing their home. So these are a few tips or tools that you might be able to use to really help you free up that extra cash and have no issue getting your mortgage payments done every month. The first strategy of 6 is to re-amortize your mortgage. Your amortization is something that was built in when you first took your mortgage with your lender, and typically it's about 25 to 30 years. A lot of you are probably on 25 years as of right now, and they used to go as high as 40 years back when I got my original mortgage. I'm going to show you a simple strategy based on where a lot of your mortgages might be and use some very general numbers to show you how this math works out. This first strategy decreases your monthly payment for your mortgage, and the best thing about it is there is typically zero cost to get it done. So let's get into some general numbers on what that could look like for a lot of you. Imagine you have a mortgage balance of $300,000 and you took your mortgage about 8 years ago. So based on a 30-year mortgage, you have about 8 years remaining on that. And the current interest rate that you got your mortgage at was in and around 3%. That means your monthly payment is about $1,261 per month. Under a re-amortized mortgage, or basically extending the length of the repayment terms of your mortgage, after those 8 years, you only maybe owe about $244,000. If you were to crank up that amortization from 22 years back up to 30 years, even with the same interest rate of 3%, your new monthly payment becomes $1,026. This is a reduced monthly mortgage payment of $235 per month. The second strategy is to stop accelerated payments. Many of you might not even know that you're doing accelerated payments on your mortgages currently. This again will reduce your monthly mortgage cost, and again, there is likely zero cost in doing this to your mortgage. Let's go again back with some more general numbers. Your accelerated payment based on how you're currently structured in your mortgage, again with a balance of about $300,000 and an interest rate at 3%, under an accelerated bi-weekly payment, your payments are around $631 per month. If you were to change this to a non-accelerated payment with all the same criteria, the mortgage balance and interest rate remaining the same, your non-accelerated bi-weekly payment becomes $582 per month. This is a reduced monthly mortgage payment of $106 per month. The third option available is refinancing your current mortgage. And this is a beautiful strategy for any of us that have any outside debts. So whether that is a car loan or a student loan or really high visa payments you might be making, you can roll those all into a new mortgage under probably a better interest rate than the one you signed maybe a couple years ago. Now, the important piece about this puzzle is really about what your mortgage penalty is. So that's something you're going to have to inquire with your lender about, but let's see some general numbers on what that could look like for you as well. And I'm going to base this off roughly a $40,000 debt. So someone that was carrying $40,000 worth of debt, whether it was Visa, car loans, whatever. So let's see what the math looks like. This is an example of somebody that refinanced their mortgage. So when they went into all of this, their current mortgage was about $357,000, but they had outside debts and costs, as mentioned, of around $40,000. They had 28 years left on their mortgage, and they had an interest rate of about 3.44%. This means their total household payment was $2,875 per month. Under a refinance mortgage, the benefit, of course, is getting today's interest rates. So when they roll that debt into their new mortgage, that $40,000 plus any costs in terms of mortgage penalty and lawyer fees, which I gave about $7,000 worth in this example, their new mortgage balance becomes $403,000. The remaining amortization on their mortgage stays the same at 28 years, but the new interest rate is the big piece of this. Their current interest rate at 2.69%. This changes, this new refinance mortgage brings their new total household household payment to $2,050 per month. In this example, they have reduced their monthly household payments by $825 per month. Your next option is to add a home equity line of credit or a HELOC to your existing property. This could also be seen as a secondary mortgage just to free up some cash to pay whatever bills you might have upcoming. This is typically the cheapest way of borrowing money and is tied to the prime rate, which is very, very low right now. The best part about it is you only pay it if you use it, and it's only interest-only payments, which keeps it lower than a traditional mortgage payment. Now, this type of thing will involve some additional costs, potentially. Depending on who you bank with, you may need to get an appraisal and you may need to have a lawyer execute documentation to get a secondary mortgage or a HELOC on your property. But check with your lender. The reason for this is simple. The big 6 banks or credit unions may not incur additional fees because of how they registered the mortgage and the potential that they registered it higher when you took it. So all the legal fees are already done and they know the value of the property. Provided you qualify for the amount, there might be no costs associated with doing this. Now, of course, the kicker is you must have 20% remaining in your property to get an A+ lender to do something like this for you. But definitely a great option for anybody out there looking to find an influx of cash quick. And the last option out there is the deferral payment or the skip-a payment. Now, some of us have these actually built into our mortgages already. I know for myself, I have something called a mortgage holiday. That gives me the ability once or twice per year or per renewal cycle to essentially miss a payment on my mortgage. What this does is it changes the schedule of the mortgage, but not the mortgage itself because it's already built in. Now, if we're talking about the government deferral program, it's important that you research these and you know exactly what you're getting into and speak with a lender about that as well, because it's not just a holiday. It's not just the removal of your responsibility to be paying your mortgage. You will be paying the interest that is owed, and you could add to your additional mortgage by taking on a program like this. So very important that you research that. I put a link below this video to the Canadian Mortgage and Housing Corporation's website where you can get some further information about this. Now, I'm told by my mortgage lenders that it's not just the big banks that are doing this, it's the majority of mortgage lenders. So be sure to reach out to whoever does have your mortgage if this is something that is of interest to you. I hope this quick video was helpful. Anything I can do to help any of you in terms of information, I am into all of this to make sure I have a very good understanding of how I can better help everybody out there. It's important that we get through this together. It's important that we help keep you floating if you need help to do so, and it's important that nobody loses their home. If you have any questions about any of the information in this video, please do not hesitate to reach out. I am here to help. I'm here to be a resource for you. I hope you are all safe and healthy at home. We'll talk to you soon.